And of course, good evening, traders from across the globe. Thank you for tuning into my 2443rd edition of these educational videos that teach you the art of technical analysis. Traders, tune in. We've got Fed Day number 2 happening tomorrow. Tonight's Tuesday, tomorrow's Wednesday. The Fed makes a decision to raise rates. 75 basis points, 1 whole point. We'll see. But we know the Fed is raising. Before we get involved in that, remember the risk behind trading. There will be a lot of risk tomorrow if you're going to trade. If you are trading, trade tonight. Get out sometime tomorrow and sidestep this thing. But remember the risks. Put your stops in first. These are very risky markets. Never trade without stops. So, last week I came out and did videos and said, look, the fund managers, they're going to push this thing up because we've got a Fed meeting next week. And they pushed it up right into technical resistance perfectly. I showed you that chart towards the end of the week in one of my videos, the NASDAQ. And now we've got this. Wall Street funds took the market up right into Fed decision day. A rate hike, which happens tomorrow, or Wednesday if you're watching this video, happens today, creates a price adjustment. So back down we should go by Friday. A rate hike creates a price adjustment in the markets. So by Friday, Monday, we'll be heading back down because that has to happen because they're raising rates. Now, if they were lowering rates, it would adjust us up. They're raising rates, it's pulling us down, but that was the purpose of raising rates. Everybody out there watching, I keep hearing from my fans and traders in my live trading room all day. It's open 24 hours a day, by the way, so you Europeans can hang out with me. And they say, Oscar, you know, it's so bad, and recession and inflation, and the market's going down, and why? And is it going to be like 2008-9? And absolutely not, traders. And I've been telling you this since January 4th of 2022, I've been telling you the same warning. The Fed is raising rates. That is to slow things down. They said it for 6 months before they started raising them. Inflation's getting out of control. It's getting hot. The markets are really sky high. Stock prices are out of control. We've got to slow this down. They finally started raising rates, and it is slowing down. It's what was expected. There's nothing wrong here. In fact, I'll tell you, in my 41 years of watching, I have never seen an instance where the Fed had to raise rates because the dollar was high. It's never happened, not in my existence. Here's what normally happens. You get inflation because your currency starts tanking. It drives the prices of everything up, and then the Fed starts raising rates. Why? When they raise rates, it makes our dollar more appetizing. People from around the world buy into our dollar. The dollar starts to go up. It tapers inflation. That's why you raise rates. In this case, the dollar was sky high when they started raising rates, and it kept on going. Traders, that is not a contraction. In my view, 41 years, that's actually an expansion of currency. We've expanded. We're not contracting. The market's pulling back. Yes, they raised rates. Raising rates means that big corporations have to pay more to offer corporate bonds, so they're going to lose money. Their stock adjusts lower. I get that. But they never raise rates because our dollar is high. That's not why you never raise rates, right? So what we have is a situation I have never seen. We had a very strong currency. Yes, there was inflation, but usually that's created because the currency's going down, drives up the prices of everything. We had inflation while the dollar was strong and kept getting stronger as they raised rates. So that's actually an expansion, not a contraction. The stock market is one thing, the economy is another. So I think our dollars are expanding, not contracting, and they're worth a lot. And this isn't the worst thing we've ever seen. They're pulling the markets down on purpose, so don't get nervous about this. Just trade what you see. Because I'll tell you right now, they raised rates, but crude happened to go to 127 at the same time. If crude was not there, raising rates alone would only hiccup the market and it would still have gone back up. We had the double knockout punch. Crude 127, they're raising rates. That was enough to knock us down. Now crude oil is starting to drop. That brings us to number 2 on the board. Crude oil, crude oil, crude oil. The targets in crude oil remain valid from the last video. What are they? 83, then 77, the main target. Now, if crude oil comes back that low, On the 23rd of June, I did analysis for my live trading room. And then I penned it and put it on my big screen, showed them what it was, and I told them on 6/23, what's going to start to happen now is crude will work its way to 77. When it's there, and if it gets even lower, it will push the price of S&P up to 4,600, 4,700. That will happen. I penned it on 6/23. Crude is starting to work its way now towards 77. So this scenario is starting to happen, and I promise you, after this rate hike, and we adjust for it, if crude continues lower, bigger picture, stock market will start to work its way back up. You'll see the 1-2 punch is going to just become a one punch. And the one punch is when they raise rates, we'll have a few days down and it'll just head right back up. We need crude high prices out of the picture. So that's what I see. Technically, it all comes out on the charts. I'm just telling you technically what I see fundamentally. And then do not fall in love with the upside. Remains valid, stays valid, and will continue to remain valid until the Omni tells me something different. Traders, I've got 2 out of 3 possible seats for this Omni camp in September filled already. I've got 1 open ticket left, September 8th through the 12th. I will train you here live in Las Vegas how to do the Omni for yourselves. You come in on a Thursday night, you train with me and work with me Friday, Saturday, Sunday, Monday. You leave Tuesday morning. You leave with a brand new laptop and the knowledge of how to call Oscar's Market Navigational Indicator, the Omni, for yourselves. God forbid I get hit by a bus or a plane lands on my house tonight. Well, not tonight. After you've come to camp, well, then you don't have to worry about me feeding you these trades all night long. The Omni has been killing it for us, hasn't it? The trades have been great. We've had very few losers. The losers are small. The winners are grand. We've had another great month so far for July. It's not over. And I would like for you to learn that for yourselves. Now, I do not approve every application that comes in. I accept all the applications. I go through them. I call some back. I only accept the ones I feel like accepting. So you have a shot at getting in. If you are a novice, please fill out the applications. We love novices. So, and of course, pros as well. So remember, go to livewithoscar.com. Come see me in my live trading room. Tell me you want to come to camp, or go to OMNIBootcamp.com, fill out the application there, and I will personally call you for OmniCamp. Traders, if you don't mind, take a quick look at this video, and then let's go look at some charts.
I'm not paid to say this. In fact, I paid to be here. You know, I would recommend it 1,000 times over.
I had big expectations regarding his system, and this whole experience just blew my mind. I mean, it over-delivered expectations.
Traders, the NASDAQ daily bar. Last week I presented this chart in some videos. We were down here and I said they're going to drive this right up to the Fed meeting. Well, look what they did. They drove it up to the Fed meeting and they drove it up to the top of the channel, or bear flag, whatever you want to call it, and right to the Omni average, right? Since I showed you the chart from the beginning of the week, I showed you this chart at the end of the week and we were there. Look what's happened since, huh? How about that? So the fund managers drove it up leading into this week. Remember, it was all the way down here, and now they have a diving board to jump off of to push it lower. Likely turn this back into a flag and end up down here somewhere, but we'll take it one day at a time. Now, this is the one I was talking about. Crude oil, crude oil, crude oil. It is all about crude. Now, I showed you this chart where we had the head and shoulders, and I said, look at that, and then it got below the Omni, and it started to mess around below the Omni, and then it started to show itself, and here it is. It's actually in a really long channel after it created the head and shoulders. The top of the head and the shoulders is the top of the channel. It just keeps going. The top of the flag gets hit, then the flag hits again right here. Look at that. So it's in this massive channel. Then it's inside of this flag right here. Check this out. That's crude. And what did it do? It hit right there. So now, if they raise rates, it should drive dollars up. And if it drives dollars up, it should help crude go down. So the analysis is right on target. We're inside of this flag. It's a bear flag. We're below the OMNI average. We hit the top of this channel after dropping from Head and Shoulders. We are going down, kids, and eventually we will hit my targets, or at least that's what should happen. Of course, if the markets start to go the other way, I will tell you and we'll take those targets away and say no. For now, these targets are absolutely valid because you've got a bear flag, you've got a bear channel, you fell out of a Head and Shoulders, and the fundamental behind this is if you didn't think about what Biden might have said when he went on his little trip to get oil, he basically said, listen, if we don't get the price of oil down before this election coming up in November, they're going to bring in a bunch of Republicans, and then those Republicans are going to crank up the crude oil in the U.S., and you cats are going to be in trouble. So you better make the price go down so I can continue being a pirate like I've been, and that's why I think they're letting the price go back down. That's what I think the fundamental is behind this whole mess. We'll find out soon enough. Traders, remember to join me at livewithoscar.com. The chat room is absolutely free and no credit cards are required. And then at all times, keep your emotions out of trading. How do we do that? Say this to yourselves over and over again, and you know what that is. Stops are in. Emotions are out. Thanks for tuning in. I will see you all at livewithoscar.com.